All right. Do you want to give an intro, or should I hop in here?
Why don't you start and I'll jump in.
Cool. Well, happy to be here. I'm Dylan LeClair with Bitcoin Magazine, institutional lead. We're pretty pumped to be partnering with you guys on Unchained Capital. VIP launch night tonight, but now we're doing a discussion for undefined period of time for your clients, the signature clients. So excited to be here.
Yeah, thanks, Dylan. It's always good to hang out with you, man. I'm Dhruv Bansal. I'm one of the co-founders at Unchained. I've had a lot of roles and responsibilities over my time there. It's been fun to watch Unchained grow over the many years, and I'm proud to be able to partner with you guys. I've been reading your magazine for a long time, and excited to reach a bigger audience and to bring some interesting conversations. So thanks for chatting today.
Yeah, I love it. So I shot you a note earlier with the couple like core concepts of what I found, and I told you before the show, I was rambling a bit before this recording, of the things that excited me about the Unchained product before I even knew any of you guys on the team, or not even the Unchained product, but what Bitcoin could bring to a financial system, particularly multi-sig, distributing trust, and with that, the novelty of Bitcoin over collateralized lending. Or just a 24/7, 365 liquid market globally, and how in theory, these are zero default products, and this is in the realm of theory. The exciting thing is that it's actually not theoretical, and you guys have been doing it for 7 years now, 6-7 years now. So those are the really exciting things for me. And the next one I would say kind of aligns with those two is the multi-institutional key management, particularly kind of with the onslaught of the ETF products and kind of the beginning of like Wall Street institutional acceptance. So I think that's where I would say maybe this conversation can go. But is there anything you want to start with?
Oh, gosh, those are interesting, I think, and timely topics. They're also very much related. I think they can, in some sense, maybe the second problem or topic can be a solution to some of the challenges in the first one. In some sense, I think Unchained, from inception, has really been a company that, if there's one thing that we focus on and spend a lot of our time thinking about and implementing, and is kind of the backbone of a lot of our products and services, is the notion of how do we collaborate securely. That's like a deep question, I think, in a lot of ways. On some level, it's a question that Bitcoin itself sort of asks, right? The construction and implementation of Bitcoin asks us to find ways to collaborate with each other despite adversarial behavior. And the solution that Bitcoin offers is really interesting and novel and cool. It seems strange to me, then, that so much of what passes for owning and trading and working with Bitcoin financially consists of just giving it to people and then hoping that the website you check in on is correct. And there have been countless, I think, instances of that trust model breaking down. But yet it persists. It's a pretty common model because it's actually really useful. And it's a great first stop for a lot of businesses and investors when they're getting into Bitcoin. I think it'll never go away, and it's very important. But there are other ways of holding Bitcoin and custodying Bitcoin that I think also ask us to think about what does collaboration really mean, right? When you're protecting billions of dollars in Bitcoin wealth. So I think whether Unchained is working with individuals and helping them custody their own Bitcoin through the generations, whether we're talking about ways that borrowers and lenders and servicers and originators can hold keys to protect collateralized Bitcoin lending, or whether we're talking about all sorts of other ways that human beings need to communicate securely and co-authorize important and costly transactions. Collaboration and cryptography and communication are kind of at the heart of Unchained's business. So a lot of these things go together. We can kind of talk maybe more about how that affects credit and lending and trust and so on, but that's one thing that I think really ties all this together is collaboration, and specifically collaborative custody, like a model that Unchained really pioneered.
Yeah, one of the things I really respect about your guys' business is it seems like, and I think just from what you guys have implemented, this is the case, that it's almost like if you start from a blank slate of how are we, not just today or back when you guys started, but how in a world where hyper-Bitcoinization is a reality, how do we architect a financial system on top of it?
Mm-hmm.
And I wanted to ask you from from inception and kind of this the idea for Unchained in theory to today, what has changed in your thinking and your kind of mental model on that, and what has stayed very much the same?
Wow, yeah. Let's split it up into two questions that just so I can remember to structure my answer properly. The first is really about how corporations or companies or maybe entities and people should build a new financial system given the lessons and opportunities of Bitcoin. What's different about it, or is there anything different about it? Can we just approach it the same way we approach other financial assets? And then the second part of your question is, remind me now.
What has through the journey?
What has changed about
what has
okay,
changed,
great,
if anything?
Perfect. Okay, so then if we can articulate the first one, then it'll be like, okay, what has changed about Unchained's approach to that problem? Okay. Maybe I'll start with what has changed, right? That feels like easier. I think, again, collaboration has always been the core of what I think Unchained needs to be focused on. The question has been collaboration amongst whom? What kind of entities? And I think something that continues to take me by surprise is how much individuals and small businesses are at the lead of this revolution or change. I think Bitcoin is a unique asset class, partly for many reasons, but partly because some of the first people into it aren't the sophisticated Wall Street bankers who are coming up with really complicated derivatives with lots of mathematics and data behind them. Not that those things, perhaps weren't interesting in the past, but this is really a trend that came from the fringes. And it's individuals who took the time to understand the value proposition of Bitcoin, maybe got carried away in some speculative investments as well, but found something to love about Bitcoin and a reason to hold it through bear markets over and over again. Some of the hodl wave stuff that Unchained is known for, shows how long people hold Bitcoin for, right? So it's been interesting to me that individuals continue to always lead that trend. I think repeatedly, businesses like Unchained, we try to see if we can sample the space of larger businesses, because there are now some larger businesses that are beginning to hold Bitcoin in significant terms. It feels like at that larger tier, a lot of those businesses are still willing to, or perhaps must, in their view, work with large custodians, and things like the ETFs and so on are an example of that. Most of those ETFs are custodying with Coinbase or Fidelity or one of another small number of custody providers, BitGo, other places. And those custody providers solve a lot of problems for these large holders. As much as I think, me as a Bitcoiner, or maybe some folks in the Bitcoin Magazine audience, and certainly some Unchained clients who already enjoy the capability of either self-custody or collaborative custody where they're holding a majority of the keys and feeling very empowered by that capability, perhaps they view this as like, hey, why are you doing that? When there's this other option. And the truth is it's hard, right? Bitcoin is still in an adoption process, and individuals really are at the lead of the kinds of collaboration that they're willing to entertain. It's hard for large businesses and public companies to value, they make a different trade-off, let's say, when it comes to custody and private key management and all these kinds of things. So it's a process, and I think something that maybe has changed is I continually surprise myself by wanting to continue to focus on just many individual small clients, right? As a business, it's sometimes tempting to want to go after really big businesses and just lock in big victories and big sales and so on. It's harder to go after individuals. You have to provide a lot more people with good service in order to retain clients. And Unchained loves retaining clients. We're good at it. So we provide good service. But that's expensive, and that can have its own costs. And yet it seems worth it because individuals really are ahead of businesses in their sophistication and understanding of safe ways to hold Bitcoin long term. So maybe let's return to the first part of your question now, what should be different in a world of financial services where Bitcoin exists, right? And I think this is where individuals really understand the root of the problem better than I think a lot of large institutions, or maybe are capable of acting on their beliefs with greater freedom. Is Bitcoin, there's really no such thing as ownership, right? It's really about control. If you can believe you own it, but if you don't control it, right? It's a very Dune kind of way of looking at the situation. If you don't control it and someone else controls it on your behalf, well then, if they lose control or decide to exert their control in a way that contravenes your legal understanding of how you owned it, do you really own it, right? Especially if they do that and it's irrevocable, right? Like the coins are lost or gone or moved and no one can trace them and they can't come back. It's very hard-edged. And in a system like that, should financial services tend towards large, extreme centralization, where huge custodians start to hold ever larger increasing supplies of the Bitcoin? that doesn't seem like a good combination to me. It feels like if failure leads to loss in some cases, two strategies that should present themselves are like, one, redundancy, right? So that we can accommodate failure. So how do we accommodate failure? Well, things like multi-sig are great solutions to that. Things like backups are a great solution to that. Redundant backups, working with perhaps other parties in multi-sig quorums, the concept of collaborative custody. That's really, I think, one simple way to think of collaborative custody is multi-party, multi-sig. And so these kinds of structures help eliminate single points of failure, and that provides a lot of redundancy. And what's magical about Bitcoin is as we create that redundancy, we also get to define the amount of control. In a 2 or 3 quorum, it's really different if you, as the quote-unquote owner of the Bitcoin, command 2 of those keys. You have, in some sense, unilateral control of the coins, as compared to if you only held 1 or, in fact, 0 of those keys, right? And delegated that responsibility to other parties, perhaps friends, family, colleagues, or professional counterparties, key agents, as we like to call them in Unchained's parlance. So I think in a world where Bitcoin has this very hard edge where it can't be lost, otherwise we can't get it back, redundancy matters, and spreading out risk matters, and eliminating single points of failure matter. Certainly custodians, especially the successful ones, practice all of these things at scale massively well inside of their own boundaries, right? Inside of their business. Unchained prefers a model in which we seldom or never hold a majority of keys in Bitcoin wallets for clients or partners. We're always in collaboration with them. That distributes the responsibility, distributes the keys all around the planet. It builds a network that supports itself instead of isolated hubs that are, perhaps with very strong and thick walls, but, once they're breached, and it's kind of over, right? So I think that's a important and sort of philosophical structural learning to make. And unless you really accept that, you can live in this world where those guys have a good website and a good mobile phone and most people use them, so I'll just continue to trust them with my Bitcoin custody. Now I'll have no proof that the coins are actually there or they aren't being rehypothecated in some way, or various other ways that, whether by intent or by misintent or by mistake, those coins could be taken from you. So it's kind of a long answer, but a complex question, right?
That's
and I think, again, collaboration is kind of at the heart of both of those problems.
What, like you said, and Bitcoin is very much has been and still is like a grassroots movement pushed by the sovereign individuals of the world. What are the challenges been from, as we're now starting to see the bigger institutions, obviously like the BlackRocks of the world coming with ETF products, but more so the importance of that, it's kind of as a signal to the market of like, okay, this thing's okay to touch now. As maybe as antiquated as that might be, that is kind of the reality. How challenging has it been, or not challenging, but threading the needle of, okay, we have this ability for radical sovereignty and distribution of trust in a world where all of these corporations are used to, like, there's no concept of self custody or like in a way that we have with Bitcoin, we can distribute trust. How is that that learning curve evolved with not the individual clients, not the small businesses, but kind of the bigger, more legacy institutions? How have you seen that change, and what have been the bigger kind of points of struggle there?
Maybe, how about this? I'll try to describe a pattern, which I think is like a fractal pattern of adoption. It's an idea that's been repeated in many places. And then we can talk about how a particular instance of it, I think, is there in the ETF, but there are many other instances. And then just, I think, what that pattern of learning more about Bitcoin over time, how it kind of leads you to self-custody. So the fractal pattern is basically like this self-similar adoption, cascade or something. I don't know what the right language is. Different people describe it differently. But it's just the notion that Bitcoin always grows by some passionate person or entities figuring out Bitcoin, getting excited about it, telling everybody that they know, trying to convince them. Most people don't listen, but some tiny fraction of people who are probably most like that person in some way, like, do listen. That person convinces them, and then the cycle repeats itself eventually over and over and again. And it's funny because each cycle is characterized by some of the same things, even though the scale is constantly changing, both the scale of adoption, the number of people, the value of Bitcoin, its price, et cetera. Some of the stuff is self-similar across those scales, which is everyone thinks they got in too late. Everyone bought at the top of the whatever market they were in, right? There's some everyone realizes eventually, if after enough cycles, that Bitcoin won't actually die, and then they start to realize that they didn't actually buy enough, and then they start stacking. Right, that's a very common series of emotional beats in the life of a Bitcoin owner. Right, and I think there's another parallel process to that, which is as you learn more about Bitcoin, you begin to understand more about how it actually works. Then that increases your conviction in the asset class, and that's actually a nice self-reinforcing pattern, because if you buy a small amount of Bitcoin over a 10-year period, it'll grow to become a large amount of your net worth, but also your knowledge and conviction in Bitcoin will grow, hopefully commensurately, right? So at no point are you feeling crazy about the fact that now suddenly 70 to 80% of your net worth may be actually in Bitcoin, simply because it's good money that you've held for a long time. And maybe by choice and by need, you've spent dollars and other kinds of assets preferentially to spending Bitcoin over that period. That tends to be what happens. Hopefully over that time, one of the areas of learnings that a person can go through is the realization, again, of this fundamental counterparty risk, and the fact that if Bitcoin are gone or stolen or destroyed, like they're really gone. It's really, no one's going to replace them. And the realization that self-control and sovereignty, but, tuned with a certain amount of redundancy and social key recovery and other useful tools is the right way to protect Bitcoin. That starts to become an understanding. And again, in this way, individuals are ahead of the market. So kind of applying this fractal pattern to the ETFs, I think you're absolutely right? The ETFs, maybe I'll tell a small anecdote to have this make sense. Like, I'm a Bitcoiner, and I've been telling my dad for a number of years back in the day to buy Bitcoin. He didn't really listen, and then he finally bought Bitcoin when some other doctors at work were talking about it. Right, so that's an interesting thing. He needed to see someone in his peer group, not his idiot son, but some people in his peer group like engage in this activity. Right, so peers matter. Right, facts matter, but peers matter too, because most people need to feel like what they're doing isn't just totally crazy. In fact, I bought Bitcoin early in 2013, largely because for me, my peers there were other tech entrepreneurs, a lot of whom were starting to buy Bitcoin in that era. I wasn't part of the cypherpunk 2011 era. I was more 2013 tech entrepreneur era. Again, I needed to see my peers. I heard about Bitcoin in 2011. But I needed to see the price rise a little bit, and I needed to see my peer set start to engage with Bitcoin. And then that made it okay for me, too. So I'm not immune to this effect. My father wasn't immune, and I think a lot of investors and traditional Wall Street types are not immune either. And when they see things like the ETFs, like be approved, be hugely successful, and work and blow people away, I think it's like, okay, maybe this is okay. Maybe I can be part of this too, right? And all the facts that I've heard, maybe I start to listen to those facts because I now believe that my peers are also doing this and that it's therefore acceptable for me. So in that sense, it's yet another self-similar cycle of adoption, and it's driving the price in interesting ways, as such cycles always tend to do, because they get larger and larger over time. Each cycle is larger than the last one, I think, for these reasons. My hope, right, is like the other cycles, what happens is this cycle, people who adopt are going to experience, eventually losses, in the sense of Bitcoin's price will crash at some point. I don't know, from 300K down to 120 or something, and people will lose their shit. And that's fine. That's happened before. It'll happen again. But people will survive. Some people will hold, whether in the ETF or other places, through that process. And they'll continue to learn. And over time, they'll start to realize, hey, keys kind of matter too. And then eventually they'll find their way to thinking about self-custody and maybe buying real Bitcoin instead of just the ETF. And eventually they'll become Unchained clients. So it's just a process of learning and adoption. And I'm excited to see it kick off with a new cohort.
Love it. Yeah, I mean, the ETFs are obviously a catalyst for flows themselves, but I think more so, just as you described, it's more of like a stamp of legitimacy. It's like, oh yeah, I mean, I own every asset I own in my retirement accounts is sponsored by, or issued by BlackRock or iShares. So
yeah, and it is cool that you can just kind of buy it from your brokerage account. You can just search for quote unquote Bitcoin and buy it. And maybe that doesn't mean that you understand it suddenly, but at least you can start to get exposure, and maybe you can start that journey of understanding.
Yep. So a bit of a pivot, but we as we were talking a bit before, I think one of the most interesting things about my journey in this space was 2022, as we saw kind of the hangover of the 2021 micro bubble. I mean, I call them like monetization bubbles. And the washout of all of the yields and the fraud and the crypto custodians that didn't actually have the Bitcoin they claimed to have. What was that like to navigate as a? Because I mean, I know personally many people were like, "Oh, the whole Bitcoin thing's dead." The CEO of Bitcoin, Sam Bankman-Fried's in jail. But as a company with a collateralized loan product, that's experienced zero defaults, right? Not in the sense of someone has to post more collateral, but in the sense of the creditors, right? It's a zero default product. What was that like, kind of navigating that, and also maybe explaining the difference in models between Unchained, and maybe you can just explain the difference in the model of an over collateralized Bitcoin loan with Unchained versus Celsius's yield or whatever. Because I think every time I talk with someone, or not every time, but very frequently, when I'll mention, if someone has a significant amount of Bitcoin and they don't want to incur a capital gain, I say, well, yeah, an over collateralized loan, and they go, oh, yield, where's? And I'm like, look, it's not Bitcoin denominated yield. This is a USD product with the best collateral known to man at the center of it. So I guess maybe if you want to explain that model briefly for anyone that's not familiar, and then also how is that the conversations with the people that may or may not be interested in financing the USD side of the equation. How has that been over the years, maybe through 2022 to today? Just
Man, all right. So
I threw a lot at you there.
I just want to repeat it because otherwise I'll just rant incessantly about something unrelated. So we want to talk a little bit about Unchained's lending product, like I think what's unique about it, what's different, what it felt like in 2022 when a lot of things were breaking. I think everybody who's been in Bitcoin for a while suffered in that period. So what was that like? And then was there anything else?
Yeah, from the sense of the creditors, or I would say
how should lending capital markets respond to these learnings and insights?
One of the things that I told you before, I was talking with Phil Geiger a few years ago, and I was like, man, if this over collateralized Bitcoin lending model, not even with pooled capital, kind of with segregated Bitcoin collateral for each client, each loan, this is the golden goose of financial products. This is why, in theory, I would say that this should be Fed funds plus 20, 25 bips, or and I understand in theory versus in practice, and why is this, in your opinion, still so misunderstood by capital markets?
I think it's both fair, I think, and unfair to say that it's misunderstood by capital markets. I think maybe some people, maybe mispriced. It's hard to both believe in efficient markets and then also believe that there's these massive price distortions. But you can pick either way, I suppose, depending on your mood at a given day. But I think it's also important to realize that everyone's trying to solve for some problem, and it's important to think about what folks who work at capital firms are solving for before we really sort of dismiss their pricing is what something I've learned, right? Maybe let's start there even. The notion that we could collateralize Bitcoin and offer USD loans much the same way in which you can analogously, if through different means, obtain a margin loan on your brokerage assets or a home equity line of credit or similar kinds of credit products based on some other asset that you own. That was kind of the original thought that really kicked off Unchained back in 2015. That was the product hypothesis that Joe and I, Joe, my co-founder and our CEO, kind of condensed around. We did some research, talked to a lot of early Bitcoiners in Austin, like, hey, what kinds of products do you need? Do you want? What? And they already had some kind of custody. They had already bought or knew where to buy Bitcoin. Coinbase existed, for example. What they didn't have was financial services. They didn't have risk management tools. They didn't have lending products, credit products. They didn't have insurance. They didn't have advisement, right? They didn't have complex derivatives and all sorts of stuff that maybe they might otherwise be able to get for other more mature asset classes. So it struck Joe and I that, okay, great. This is really what Unchained is all about. It's not about unchaining the utility and capability inherent in the best money by building financial services for it, but not in a tone-deaf way, in a way that really understands how Bitcoin works and tries to work with it instead of against it, right? Try to take Bitcoin as far as it can take us. And so the lending product was our first idea. I do think when we started the product, we assumed, like you're describing, that, hey, Bitcoin is actually kind of a really good form of collateral, and therefore we should be able to get really low rates from capital markets, which we should then pass on to our clients, right? Similar thoughts are on slides from that era. It's very cute when we go back and look at that. And I think what we learned over time is that, sure, that's what we believe, but how do you really know? And now let me turn it back to SBF and FTX in 2022 and the collapse of BlockFi and Celsius and a bunch of other lenders and so on. I think for me, I understand how different Unchained is from those models, and I'll get into that maybe here in a minute. But from outside this world, if you aren't in Bitcoin or in crypto, or you aren't tracking the details, you don't maybe know that much about Bitcoin and keys because you use Coinbase or some custodial service and you haven't really worked at that level yet. It's not really clear what the difference is between, any of these things, or what mistakes one lender made and the other one didn't. There's some nuance, right? And so where I, from within the industry, perceive a huge distance between me and SBF, thank God, and Unchained and FTX, thank God. But that's obvious to me. We couldn't be more different, right? But I also understand that, like, there's a reason my cousins in India are WhatsApping me being like, yo, SBF went to jail or whatever. Are you okay, man? And being like, yeah, I'm fine, man. It's good. From the outside, we all seem like we're the same thing, right? And so we have to remember that a lot of people who work in capital markets aren't really in crypto, right? They're looking at it from a dollar-based, like, how do I get a return on this with a, risk-adjusted return and all these kinds of concepts, as well as, truth be told, a certain degree of why should I waste my time with a deal that has risk and is new when there's 10 deals behind it that I understand and look like everything else I do, right? So even to think about Bitcoin and cryptocurrency from a more traditional financial seat, especially in a bear market, is like you have to have curiosity. You have to be willing to take personal risk, career risk to do this.
Yep.
It is easier in bull markets, right? Because people are more excited about Bitcoin and cryptocurrencies. And so now bringing a credit opportunity in that space is maybe more interesting and less likely to cause trouble if indeed it fails. And that's the point, is that if you don't understand the details, how can you really tell the difference between these things how can you really tell the difference between SBF and more legitimate operations, right? You have to be willing to do some work and to understand. That takes time, takes effort, takes energy. Not everybody in these markets has put in that energy and that time. I think those that have actually really understand it, right? And this is where I think it's sometimes going to be unfair to characterize folks in capital markets as not quite getting it. Sometimes I understand it really all too well, and I think they would argue, okay, great. So the collateralized model, I admit, like Unchained, for example, with relation to Unchained has done a great job protecting, previous lending capital assets and running a loan book in a way that balanced, the needs of borrowers with the requirements of lending capital providers and so on. But nonetheless, what might happen, for example, if Unchained disappeared, right? The collateral is in some sense safe, but in another sense frozen, right? You have to be able to organize the various independent wallets, because Unchained really focuses on security and privacy. So all the loans are held in totally separate Bitcoin wallets with different keys based on the borrower. Our borrowers often have a key in their own collateral for their loan. And so this creates, I think, a very safe and hard to break and robust system. But it's not a system that, for example, some other entity could just pick up and operate right after Unchained, if Unchained were to disappear. Of course, Unchained's intention is not to disappear. We've demonstrably outlasted everybody else that does this, and that's for good reasons, right? It's because of our conservative model and the fact that we take all these precautions, the fact that we don't rehypothecate, the fact that we can't rehypothecate because of the way that we lend, the product features that we have.
All Bitcoin only.
And we're Bitcoin only, which I'll come to, right? So all of this is the reason we survive. But what if we go away? It's hard for somebody to just pick up. And so that is something that lending and capital providers also have to think about. That really goes back to what we were saying earlier about collaboration. More and more entities now are starting to realize that this collaborative model for custody is the right approach. It's not just that Unchained has competitors, and we do, and I salute them, and I think they're great. I want more people focused on this problem space. But also because more people are willing to provide a key for others to use. Unchained is growing a number of partners that want to operate a network of keys with us, of not just companies that make API calls against each other, but companies that actually operate Bitcoin wallets together on behalf of shared clients or for each other. Again, under that notion that multiple parties is harder to break than single parties. No matter what protections those single parties individually take, multiple parties can each take those protections. And now you have additional redundancy. And you can tune, again, through multi-sig rules, which parties you use and how many of what type have to do what thing. There's a lot of capabilities that Bitcoin provides on this front. And so I think it'll be interesting to see hopefully as that system grows over the coming years, as more and more entities are capable of custodying Bitcoin and providing these kinds of more Bitcoin native financial products, it becomes easier to raise capital because capital providers can reasonably say, hey, this is actually not just one company with a really unique, robust model. This is now a whole industry best practice. And okay, now I have choice. Now there's a market. Now it's exciting and easy for me to place capital. So capital rates will come down. It's why I usually tend to be pretty pro-competition in my industry, because I understand that the more capable, like high qualified providers of this service that exist, the easier it actually becomes to grow the pie for everybody. Bitcoin is so small right now. And I don't like, frankly, situations where Unchained is the only provider that has survived because we're the only ones with a business model that really made sense given the reality of Bitcoin. So I encourage more people who want good protection for their Bitcoin to come check out collaborative custody if they haven't. I think there's a reason we're seeing more and more businesses move towards the product that we've been working on for 7 years now, and I'm excited to see it kind of take off.
Love it. Kind of to piggyback on that, two of the things that I think were or two instances that I think were really ahead of their time, that I'm cautiously optimistic kind of pick up where they left off this next cycle or the next 12, 18, 24 months was Marathon Digital and MicroStrategy. I believe it was both with Silvergate Bank, kind of taking on over collateralized Bitcoin loans.
Mm-hmm.
And I'm actually, I forget, I should maybe know the MicroStrategy details, but do you think that there is a case where kind of more public institutions or larger institutions realize that Bitcoin as collateral is this very, I mean, it's a very opportune space, especially when Bitcoin's appreciating. Obviously, it's not it goes both ways. The inelasticity of Bitcoin and the price cuts both ways. But do you think it kind of, because the product was more of a retail product to start with Unchained, if I'm not mistaken, and I believe
for individuals and small businesses.
Yeah. And do you think that shifts to more of an institution, like a kind of a public company, or maybe even not public, but like a larger institution sort of shift, or do you think it kind of stays with the smaller companies?
I think so Unchained historically, most of our lending and most of our clients have been individuals and small businesses. A lot of times those individuals hold significant amounts of Bitcoin.
Yep.
So our clients do tend to be wealthy overall. But indeed, large businesses have not been really the best, the largest client base for us right now. I think large businesses still need a lot of what larger custodians offer. That's the model that is easier for them to consume. It's hard for a large business to start holding, one key or two keys, and we're working on options to make that easier for businesses. But I do think Coinbase wins a lot of that business for a reason. Coinbase is a really good place to go if you're a public company and you want to hold Bitcoin right now. As a result, I think public companies can access financial services through different providers that tend to work within that model. Unchained's model would, have them ideally holding a key to their own collateral, right? So they can help, maintain its integrity over time. And again, they may not be ready for that, right? So there may be a better place for someone like that to go. I think, not to dodge the question, but returning back to the Ethereum point that we kind of made, I think part of the reason that Unchained really focuses on Bitcoin is because we did support Ethereum for a short while, and I can kind of come back to the good and bad of that. But a lot of folks in the altcoin space have, these DeFi markets that connect to stable coins really easily. And there's all these other ways to access financial services, and which maybe they would prefer. I think there's something provocative about the notion of getting an awesome loan from a piece of code in the sky. But I think there's also something scary about it, right? Yep. Anybody who's actually taken a significant financial debt or burden, or has to make a huge payment, or has a big investment going on, it's really nice to talk to human beings about it. It's nice to have, some protections in place that aren't just cryptography. Cryptography is important, right? It's kind of a very hard-edged tool, right? But there are other tools, and layering them together in a situation that especially allows social key recovery is really important. At least I think for people who are willing to admit their own, let's say, fallibility, perhaps, in these situations. But yeah, so I think a lot of large institutions may be better off working, getting a loan through Coinbase or similar for them now. I do think that will change over time. Again, I think Unchained's model is growing. More and more businesses and larger clients are starting to realize that they want to hold a key. I mean, they got in later on some level in Bitcoin, right? So they're still learning. They're still figuring out and convincing stakeholders and so on internally, right? That they want to first even own Bitcoin at all, and then eventually move to having a greater role in actually self-determining how they custody it.
Yep. How are we doing on time? We good? All right, so maybe not a curveball question, but a little bit of a shift. How do you think about, and we don't really know how the future is exactly going to play out, but one of the things that I think has been really interesting in the last year in the Bitcoin community has been a debate on block space and the fee market, and not to go down that whole rabbit hole, but how does Unchained think about scaling sovereign self-custody to, I say 8 billion people, but to as many people as possible, and especially as if we think we're headed to like a hyper-Bitcoinized world, I mean, looking back, hindsight's obviously 2020, but in 2022, the mempool was a ghost town. You could send as much Bitcoin or consolidate as many UTXOs as you want for basically no cost, one sat per virtual byte. How does the Unchained model change or maybe stay the same in a world where the block space, which I think has been criminally underpriced, and maybe that's just a personal bias, over the last couple of years, in a world where there's a much more kind of robust Bitcoinized world, how does the model change at all, and how do you guys think about that? And scaling self-sovereign custody to as many people as you can.
Yeah, I mean, I think Bitcoin has a very hard problem, and in general, any blockchain type solution has this problem of like, the less data I require everyone to know about, the more robust I am. That's it. And the more data we need people to know about, the less robust we become. And that's just a trade-off. And are we at the ideal optimal point of that trade-off? Who knows? Is changing that very painful and hard? Yes. So should it be only reserved for situations that are kind of emergencies or otherwise complete blockers? Like probably. So I tend to have a pretty nuanced take on some of these block space kind of issues. It's like if, in general, I tend to want to believe if people are paying the fees, well, then they get the space. That's on one side of it. On the other side of it, I acknowledge that the fees must increase. I think it's interesting to think about the overall dynamics of the fee market, because you're right. Like, there have been times historically where it was multiple hundreds of sats per VByte to get into the next transaction, and some people would happily pay that. In fact, Unchained has often paid high fees when we are dealing with crucial business operations. We really need to make this transaction go now. It is worth a few $100s to us as a business to do that, and that's not unusual. And in fact, that in some sense that price elasticity or indifference that some transaction senders will have, because they're sending such a huge amount of Bitcoin. If you're sending $1 billion, even $1,000 fee is trivial. You don't care.
Yep.
And so on some level, there's infinite demand for the heaviest transactions relative to all the other use cases that exist for block space. And so I've always tended to believe Nick Carter's image of like Bitcoin transactions are massive container ships,
yep,
right? That contain massive containers, that contain tons of boxes of like things are really packaged very efficiently through some incredibly complicated market mechanism, and off-chain systems that cause that to happen. I think that has to be the future, because I don't see how the system, unless we changed it to become something that's unrecognizably different from what it is today, I don't see how the system could be anything else. Bitcoin can only scale meaningfully off-chain unless we change it. And that is a proposal, right? There was a whole block size war about this kind of a thing. But Bitcoin as we know it today really is dependent upon off-chain scaling in order to meet things like our daily need to exchange small payments, much less other more esoteric speculative things that one could do subsequent to that. I think those solutions will exist. And part of what will drive the adoption of those solutions is increasing fees, right? Like Lightning is only so useful if you can reasonably send transactions cheaply on L1, right? If that continues to remain cheap, Lightning's use case is diminished. Many people are okay paying on layer 1 and walking away with zero conf or whatever it is, right? People have different use cases and needs and requirements. I think as the overall value of Bitcoin increases, the fee market increases, which doesn't happen linearly. I think as demand increases, the fee market increases like quadratically or in some, a significant excess of what basic demand looks like. It grows very quickly, right? It spikes very quickly. And this is another point to note. It may be true again, even if we hit, hundreds of sats per VByte once more, that we'll go back to like 1, right? I don't know a priori, like, will it always be true that there will be times where transactions are cheap, either cyclically over the many years or whatever, or during the day or something like that? Or will we enter some point where you will never ever see another 1 sat per VByte transaction ever in history again? I think we might actually enter that era, because to me that would indicate massive adoption and constant transaction load, and very large and therefore hopefully efficient market for block space. And that would put huge pressure on higher layers to figure out ways to use block space more creatively, right? Like to pack more shit into it, to think of it as boxes within containers within a container ship. I think we'll get there.
Yep. No, I totally agree with you. The people that were saying during, I think, the 2022 span, and honestly, every time the mempool is somewhat of a ghost town, you hear, whether it's the crypto people or just the people that log on every day to fearmonger about Bitcoin, saying like this security model is broken, and in my head it's like, or my kind of mental model is, well, if you think this thing is going to be extremely valuable, I think like $10 trillion, $100 trillion asset. Well, the settlement layer, the block space in that world is
so valuable.
So valuable. Yeah. And even the $100, $1,000 transactions. Well, yeah, I mean, it's not a great analogy, but like, how much does it cost to send 2 tons of gold bars across the United States or across the
everything has to be relative. Yeah.
So yeah, I mean, the scaling is obviously an interesting debate, but I think the high fees kind of puts an economic incentive directly on scaling this as efficiently as possible.
Yeah, and I think coming back to your question about self-custody, like, I think it's a little naive to believe that self-custody, the only way to do it is to have a redeem script on L1 that only you own, right? That's a way to do it. That might turn out to just be an expensive way. It's like not everybody can afford a 3-acre house in Los Angeles where we're filming right now or whatever. Some people live in apartments. That's what the market demands for real estate in this area. That's a whole other question to talk about, though, is why the market demands so much for real estate. But let's not get distracted with that. Right? Like, the notion is that space can be expensive, and maybe it is expensive to directly custody at L1 to the point where only large institutions or individuals are doing that. That doesn't mean that self-custody is impossible at smaller holding amounts. It just means that it works differently. There may be trade-offs, right? There may be aggregation schemes and various other things that we don't even know about yet that will have to be created in order to give people the capability to self-custody. They'll want to, and it'll be a larger virtue, we hope. And there's enough people that already want to do it that as Bitcoin if Bitcoin was 100% of people and not barely 1% right now, the pressure would be so tremendous that the solutions would be created. I'm confident in that. And again, they wouldn't work the same way. You wouldn't have exactly the same guarantees, but I don't think we should assume that just because you don't have a private key to a public key that's in a redeem script on the blockchain, that you don't have a strong, let's say, chain of signatures through other systems with some social elements, and who knows what trade-offs are present, right? But I think there could be a meaningfully strong sense of self-custody that you still get to have at a smaller level. It just doesn't look like what today's looks like. And I think it's important to realize that right now, like, how many scientists, mathematicians, computer scientists, cryptographers, et cetera, in the world are really working on Bitcoin full time? It's not that many, right? If the world were using Bitcoin and there were, blockchain, crypto, redeem script, public key departments in every university, in every city or whatever, like, and orders of magnitude more people were working on this technology than are right now, like, what could we build, right? So I think we have to remember, as demand and value increases, like, the incentive to become clever will increase. There's a great analogy about like how much more data we're able to pack through fiber optic cables today than initial forms of long distance data transmission. Like, we've gotten so good at that technology, right? We've learned how to multiplex. We've learned how to encrypt and compress and do all sorts of stuff that gets more bits down that pipe faster. Human beings are really good at optimization. Just look at the history of speedrunning, in video games. Like, we'll figure out some amazing hacks to solve the problems that we want.
Love it. So I guess, maybe this is the last question, maybe not. But what has you most excited about the future, other than, maybe it could just be some of the stuff we talked about today, and it could be on any time horizon. It could be the next couple of years or even longer.
Mm-hmm.
What gets you fired up? And it could be personal or Unchained or both.
Well, yeah, sure. Definitely let's keep it Bitcoin focused. I think something I'm really excited about, I'm trying to write about more frequently. I just published a piece a month or so ago about how does Satoshi think of Bitcoin, sort of my attempt to talk about what I think is important about Bitcoin and unique, and how I would define Satoshi's contribution to Bitcoin almost, as really thinking about Bitcoin as markets and building a layered market. I actually think of Bitcoin as two layers of markets. We don't have to get into the details. They're out there in this article and in various talks for folks to find. But this notion that anytime someone describes something as decentralized, like really what they're saying is it's market driven. That because there's no central authority to enforce good behavior and punish adversarial behavior, people have to voluntarily choose to cooperate rather than grief each other. And the strongest way to do that without a central authority punishing people and tracking what people do is to make it more profitable to be cooperating than to be an adversary. And therefore, economic incentives are the only tools we have to build decentralized systems. Okay, that's a very deep insight and idea. And that means that every attempt to build a decentralized system fails because we immediately run into the problem of how do we pay each other? And we can't solve that problem. Because the only way to pay each other is to use centralized systems or offline systems, like to use gold in the physical world or something. But if we're talking about a digital context, we always revert back to some sort of dollar-based or bank-based or other, restricted payment rail that is very centralized and breaks our decentralization model. Bitcoin is remarkable because it understood that the core of this problem was a kind of money. And so it sort of says, okay, how do I build a decentralized system, which is to say a market? It has to be a market. And the market's function is not, to provide a bandwidth or to provide, a physical good or delivery or data or some other kind of abstract concept. The purpose of the market is to make money. But the market itself needs money to incentivize the actions in the market. So it's a wonderful bootstrapping concept. And I think Satoshi solves it by having a pair of coupled markets that together allow the trade of computations for money, which is to say Bitcoin. And okay, whatever, it's an interesting perspective on it, but now we've got Bitcoin. So it's kind of like a 0 to 1 moment. Now we have the digital decentralized money, which is to say a market-driven money. And now we get to build all sorts of other markets with this money. And so my questions are, well, what markets should we build? Like, in what order? How should they support each other? Because the hypothesis that Bitcoin is already layers wants me to continue that pattern and build more layers on top of it. Things like the Lightning Network, which help us pay each other in faster blockchain kind of models. And then if we're really good at paying each other, there's a great phrase that I read today on the internet in an AMA that I was doing on Stacker News. Someone, in one of the questions, someone asked, thinking of the relationship between the Bitcoin Lightning Network and the internet, of like, today we try to send payments within web requests. Like, we'll send some payment details or whatever, like as data within the web request. But in some sense, the Lightning Network is asking us, or maybe offering us the opportunity to send data within the payment, like to invert that envelope and content distinction, right? That is always a payment, but then the payment just has some metadata associated with it, which is the actual data that we were trying to transmit. That's an interesting opportunity. Maybe that's not how it'll actually work when markets for data and other things are built, but something like that is a really compelling idea to me. And it just shows that arbitrary human networks and currently centrally provided services potentially can be market-driven, which is to say decentralized. And we have a tool in Bitcoin, not in blockchain. That's not the technology. The technology is Bitcoin itself, right? We have a technology and arguably a methodology for taking services we want to decentralize and breaking them down into small enough pieces that we can actually solve them with markets that are settling through Bitcoin.
Love that. You want to keep going? I got a couple more, but I don't know if we should save some for.
I have some really good questions, but let's first do yours.
All right. Well, this is a bit more esoteric.
Oh God, here we go. Let's go.
But you've written a lot. You've have a great Bitcoin astronomy series. Maybe we won't go into the astronomy, but I think one of the things when you were talking about kind of the markets that we can build, and I think one of the most fascinating things for me, after kind of getting into the Bitcoin space off of just the finance, economics stuff, that's what kind of orange pilled me, was the Bitcoin and energy markets, and the idea that we can monetize waste energy anywhere on the planet, and we can bring civilization to energy sources. Is this really fascinating idea? So I guess, what do you think about?
That's a great way to put it. Bring civilization to energy sources instead of bringing energy to civilizations.
Yeah, and it's a mind-boggling idea
Totally,
when you really
totally agree.
when you break it down. But there's this idea of a Kardashev scale, and using all of the energy that one planet can, and then you can obviously go to the interstellar level. But I guess how maybe you want to give a TLDR on your theses there.
Sure.
And maybe like when was there an aha moment, or was it kind of this gradual process?
Maybe I'll try to tie it back to some of what we were just talking about with layers. It's like I feel very confident talking about sort of sometimes the near future with Bitcoin and layers and markets that we build, because I feel like I've convinced myself that like this larger, crazier story of 1,000-year view on Bitcoin's future evolution is also maybe interesting and true, and at least a fun speculation. It's not idle speculation. If Bitcoin does survive for 1,000 years, like what does it look like, and what does it look like when humanity has settlements on various planets and they're really far away from each other, and that breaks assumptions that Bitcoin made about how all nodes could be within a few seconds of each other in terms of communication time and so on. These are some interesting questions for a nerdy programmer and physicist and Bitcoiner, right? So I think some of the solutions that I've come up with are that Bitcoin, by choosing a time, which is to say 10 minutes for blocks to sync approximately every 10 minutes. It's statistical, as we all know, but approximately on average, it's 10 minutes or maybe slightly less than 10 minutes based on historical various biases and so on. It's a very nuanced point, but regardless, it's about 10 minutes. So 10 minutes is a time, but physics helps us think of time and space as interchangeable, right? You can always turn 10 minutes into 10 light minutes, and 10 light minutes is the furthest. It sometimes becomes a horizon over which it's hard to mine Bitcoin outside of this 10-minute horizon. So that's a strange idea, and maybe it's not super relevant today, but it's probably true still. What does that mean as human civilization becomes larger than 10 minutes large? And that happens in theory when we climb this Kardashev scale, right? Which a lot of science fiction authors and science speculators talk a lot about. There tends to be an assumption in some of that thinking that, of course, we'll always have higher demand for energy as human beings, right? Of course, we'll want to devour the full energy of the sun, right? But we, prior to Bitcoin, had no real reason to use excess energy if it wasn't near civilization, right? There's a lot of sunlight that streams out, in random directions through the solar system that would be very hard to capture unless we really screened off the entire sun. And why would we do that? Why would we take that crazy action in these supposed stories of how we become a Kardashev Dyson sphere building Kardashev 2 civilization? It was just a fun speculation to think, well, maybe this pattern of Bitcoin creating a reason to go harvest stranded energy is the thing that we need. It's like the sort of constant, rising of the tide that causes humanity to always go out and collect more energy. And it's the reason you build that Dyson sphere. That's like a fun idea to play with. And it kind of sort of hangs together because that time and space angle then manifests as, blockchains within blockchains within blockchains, right? As sort of interesting recursive structures. And that really appeals to me as an old physics guy and so on.
One of the most interesting things about the Bitcoin and the tie to energy for me was, and this is kind of going back to the economics framework, but if you have a commodity money and it's absolutely scarce, well, I mean, the production cost of said money is pretty important, and it's a pretty simple. I mean, these are common like Bitcoin, like as you're learning about the Bitcoin system and the Bitcoin network, and kind of learning the basic core concepts. This is pretty standard to understand mining and hash rate and the difficulty adjustment. But the aha moment of, well, if you have this economic incentive to basically monetize waste energy at zero cost, or in some cases negative cost, for like an instance, if you're in the Bakken, and you have flared methane, well, the EPA and all these environmental agencies are fining you. So you have to flare. So the cost is negative to actually combust that methane and turn it into electricity to mine Bitcoin. So if you have like basically an unlimited demand, in theory, to mine Bitcoin, then that means that hash rate is trending to infinity. And so is difficulty. So you have, and I think of it like the inverse of difficulty is, well, that means the marginal production cost of Bitcoin is also trending to infinity.
Well, let's be careful in our statements, right? Obviously, we don't really mean infinity, right? I think what we mean is, if we want to be Kardashev-minded about it, right? Like, we're using a fraction of the energy that the Earth receives or outputs, or I think a more precise way to use that is where like we're using it, it's just turning to heat, right? It's just hitting us, and the Earth is getting slightly warmer, and it's bouncing off into space uselessly, right? So there's a lot more energy that we could be harvesting, and we aren't. Right? And okay, fine. Obviously, the most energy we could use would be all of that energy, right? And that would be, in theory, make us a Kardashev-1 civilization. It's not clear that any civilization would want to use 100% of the energy that hits its own home planet. Who knows? Maybe you like sunlight. Like, what would make us do that? Like, what would make us behave that way? It's not clear. At some point, aren't we going to need other stuff? You know, we can't use all of our energy for mining Bitcoin, right? We'll have to make things. So there's definitely back pressure, right, that prevents us from the amount of energy or computation in Bitcoin going up forever. It will stop, right, at some point. I think that's an interesting, I have a conjecture about this, which I call that the Nakamoto point, basically, is when does the electricity consumption of Bitcoin stop growing and level out? Basically, and it's balanced. I would argue that there's a balance that has to be achieved at that point, and the balance is between the marginal revenue earned by selling a kilowatt hour of energy to the grid downstream versus the marginal revenue earned from mining, with a kilowatt hour of energy. If they're the exact same number, well, then you've reached the Nakamoto point, and it doesn't make sense to continue to mine more because you just as well might, sell more energy to the grid or whatever. Today, we're far below that ratio or that point, right? You typically will make more return by Bitcoin mining than by just selling the energy downstream to consumers at 6 cents a kilowatt hour or whatever. And you don't even get the whole thing if you're an energy producer, because there's distributors and all sorts of other sorts of fees associated with your business. Bitcoin can be a much more efficient way to just consume the energy at the source. And I don't think energy producers and Bitcoin miners are really in the same industry today, but eventually they are. I think it's the entire energy industry becomes merged with the Bitcoin mining and perhaps potentially other computational workloads. I would accept things like AI training is increasingly part of that story as well. I think a lot of interestingly, Bitcoin miners are now doing dual workloads for GPUs and upcoming machine learning ASICs that people are making. So I think that's just an overall interesting concept of really. And I think this is an important maybe aside that connects this conversation back to the article I just published. I think on some level, Bitcoin mining is an awkward moniker, and I wish it weren't called that, right? Because it makes it sound like the miners are creating the Bitcoins somehow, and I don't mind that phrasing. It's one that I've often used in the past, but increasingly I like to say that they're buying the Bitcoin, that I have this perverse need to point out that the Bitcoin was all created, all 21 million of it, back in 2009 when the network was launched. And all that's been happening is most of it's just been sitting there frozen. And every 10 minutes, a certain amount of it is sold. And it's sold for a given asking price, which we can all calculate if we have a Bitcoin node. And that asking price is the ratio with a factor of 2 of the difficulty and the subsidy. And so currently we're selling 6 1/4 Bitcoin, about to change, right? About to get down to 3 1/8 Bitcoin next week or so. And there's a certain amount of difficulty that the network has to provide in order to earn that 6 1/2, soon 3 6 1/4, soon 3 1/8, right? Yeah, Bitcoin. And that's a price. And so really, the way I like to think about it is that the Bitcoin miners are buying Bitcoin from the network every 10 minutes. And to me, that makes a lot more sense as a framing for a lot of reasons. One, I think that's what Satoshi maybe was thinking almost behind the scenes of I'm doing an auction, I'm going to create an additional supply and have a predetermined rate at which the supply hits the market. And I'm going to have difficulty adjustment is really a way of changing the price in response to the demand. Right? The demand of computations and therefore energy budget of the human race that is supplied to this market. So not the creation of Bitcoins, but their purchasing. And the reason I really like this framing is because, to your point, the amount of computation being exchanged for Bitcoin, in my language, not mining it, but being exchanged for it, the amount of energy that's therefore being exchanged for Bitcoin continues to increase, right? That's a slightly different statement that the amount of energy used to mine or colloquially create Bitcoin continues to increase, because that I think triggers a lot of people when they hear that, right? Because they're like, this is the dumbest goddamn thing. Like, the more that we put effort into making this thing, the less of it we make and the more expensive it becomes. Like, what kind of good has that kind of a production curve, right? And that, I think, makes people feel like these people are perverse. This is a waste, right? And I think if you just frame it as, okay, so every 10 minutes, a group of people makes a bid and tries to buy a little bit of Bitcoin, and that's how the initial supply of Bitcoin, which was already created in 2009, is being released for circulation into the market. It's based on a continuous auction whose price adjusts based on the demand of historical bidding from the market of those who provide these computations. If we framed it that way, then all we're really saying is over time, the market tends to value Bitcoin ever more greatly.
I like that. Do you have a name for it?
I don't know. I don't know what it's called. I think it's just trying to think of going back to, well, what is Bitcoin? You know, Bitcoin is markets, and basically a trade that is constantly occurring in the Bitcoin market is the trade of computations for Bitcoins, and that's what Bitcoin mining, in my view, actually is. It's that trade repeated over and over again. And what's remarkable about Bitcoin is Satoshi arranged for the repeated execution of that trade over and over again to really bootstrap the functioning requirements of a real digital currency, which is to say solving the double spend problem, Nakamoto consensus, a real ledger of transactions, a virtual machine. All of it somehow got wedged into this practice of trading Bitcoin for computations, which is pretty cool. But at the end of the day, that framing is one I prefer. So Bitcoins over time are more and more useful, and therefore the market thinks of them as more valuable, and the market overall is willing to spend more energy and computations to buy those Bitcoin. Over time, if Bitcoin were to be considered to be less useful, what would we expect to have happen to hash rate?
Yep.
It would go down, right? It's not because we got worse at making Bitcoins, right? It's because the demand decreased. And so this trade is not happening as much anymore. People don't want to spend their computations on Bitcoin. In fact, maybe if you're a Bitcoin miner, you might choose to spend those computations on AI workloads, right? I think there are other things that computations can be spent for. Bitcoin just happened to be one of, like, something that has almost you might argue if the amount of energy is not infinite, like, it sometimes feels like the demand is, right? Because there's always, the Bitcoin network is so hungry for energy that it'll always take more. And I think that's the sort of feedback aspect of this for the Kardashev scale.
Love it. That's a good answer. You got to clip that.
Clip it.
You want to take some questions
Sure.
from the chat?
We have some really good questions. So some of them are just for Dhruv, some of them are for both of you. We'll start with some quick ones. So were ETFs a good thing or bad thing for Unchained's growth path?
Okay, were ETFs a good thing or a bad thing for Unchained's growth? I think they were a great thing. I think, if I'm honest, like, there are reasons you might want to have an ETF. There are reasons you might want to self-custody or collaborative custody your Bitcoin, and different constituencies are going to be more comfortable with different things. I can't tell you, like, how many people I've probably advised to get onto Unchained or self-custody or get a hardware wallet or whatever, who didn't do it, who stayed on Coinbase. Might they be better off if they actually had an ETF? I sometimes think on that. I know that it's easier for them to buy. I have an uncle who didn't buy any Bitcoin, but then finally when the ETFs came out, he's able to buy it through his brokerage, so he just bought a little bit, right? It was actually, he finally took a position. I'm not going to say that position is exactly the same thing as Bitcoin, and there are obviously benefits to having an Unchained-like setup where you have all these keys, but I have no antagonism for the ETFs. I think they've, like we were discussing earlier, it's a new scale and a new wave of adoption that is being led by folks who are excited about this new opportunity with the ETF. So in that sense, it's really good. I might wonder sometimes how exchanges feel about them, though, because it feels like it might be, in many ways, a superior product to an exchange, not an alternative to an Unchained collaborative custody vault. Yep,
totally agree. It's not zero sum. It's Bitcoin adoption, this is like positive sum game, but yeah, if your model is reliant on trading fees or spreads, it's tough to beat the ETFs.
Awesome. Next question. What are the challenges to Unchained offering lending rates competitive to TradFi LOC rates?
Basically, what are the challenges to Unchained being able to get to lower cost of capital and passing it on to clients? There's a lot of challenges. Again, I think this comes back to lenders' understanding and assignation of the risk that's associated with dealing with Bitcoin. I think a big part of that assessment comes from perhaps a lack of sophisticated understanding between the differences in Unchained's model and things that failed in the past. Like that requires research and some learnings to understand why collaborative custody is so different from what was being practiced at these other firms of the 2022 era. But even for those who do dig in, as we discussed, like there are some difficulties with thinking of Bitcoin as collateral. Like their own firm doesn't know how to do that. So if they were to inherit a bunch of Bitcoin because Unchained failed, because the unthinkable happened, which are things that they must think about,
Yep.
what would they do with it? How could they handle it? What will be their next step? And as the market matures, therefore, that problem becomes easier. And as Bitcoin adoption increases, there's less resistance. As knowledge increases, there's less ignorance. It just takes time. So I think that's a very sad answer for the question asker, but I think the answer is time.
Do you think the increase of new institutional key agents mitigates that risk at all?
I think it mitigates the risk. I think it accelerates the time, but it doesn't send the time to zero, unfortunately. I think I'm really proud to have other companies start joining this network and collectively working to win clients and convince folks that this is a model that makes sense and has a lot of benefits and perhaps is more sustainable and robust. I wouldn't want a failure of an existing custodian because it would depress the Bitcoin price and it'd probably be a disaster. Part of me worries that such a failure may occur and that would be yet another demonstration of joining a long list of many historical such instances where the market, a new cohort in the market, learns something about custodial risk and counterparty risk.
Totally.
Awesome. Last question just for Dhruv, and then I have questions for both of you. So what caused Unchained to launch an advisory service, Sound Advisory?
What caused Unchained to launch an affiliated advisory service, Sound Advisory? I think we felt a lot of pressure from clients to offer advice that we're not regulated to offer. There was a need in the market. Our friends and family who own Bitcoin have all these questions and concerns that their existing financial advisors were not helping them with. And so we felt that this was a great opportunity. I won't be able to talk too much about the details of Sound Advisory, but you can check out their website and learn more about them.
Awesome. And so the question for both, maybe we start with Dylan. What would you think is the biggest risk in a custody solution like the one Coinbase has that centralizes all the ETFs for now?
The biggest risk is, I would say, state sponsored, and I have no problem with Coinbase. I think they've been great for Bitcoin adoption and commend them for being in the business for as long as they have and onboarding as many people into the Bitcoin space.
I bought my first Bitcoins on Coinbase in 2013.
Yeah, same here.
Yeah.
The day I turned 18. So
that's a cooler story.
it wasn't in 2013, unfortunately. But yeah, I think that's I don't think I have too much unique insight here. Maybe you want to chime in.
I don't know. I hesitate. Like Coinbase is such a great. They've been around for so long that they have gone through a lot of stuff and they've learned from it. And I really do trust them. I think they're a great business. I just don't think that I would ever want, no matter how much I trusted somebody or some business, to them to be the only party that stood between me and this asset that has intergenerational value and that I absolutely don't want to lose and so on. That's my own analysis of the situation. I prefer to have some control myself and spread that responsibly out amongst multiple entities. And maybe Coinbase should be one of those entities.
Yeah. It's not that I don't trust Coinbase.
Yeah, correct.
It's that I don't trust anybody.
Correct. Yes. Yeah, that's a great way to put it.
Awesome. Now we'll get into cosmic stuff. What are the synergies between large investments in AI that have been happening recently, both in infrastructure and in companies, and Bitcoin?
I think AI is an obviously amazing technology, and some people are extremely bullish, and there's obviously the doom crowd that thinks that the AI is going to bring about the end of humanity. I don't fall in that camp, but I think it's been interesting that the notion of compute as a commodity has been. I think AI has helped to kind of push that to the mainstream. I mean, Bitcoin mining, or maybe framing it differently than Bitcoin mining, but this has been a concept that miners are very much familiar with.
Oh,
but the notion of plugging in tens of millions, hundreds of millions of GPUs and using all this energy has it's kind of, I think, changed the conversation, or at least, brought about the conversation again of, okay, well, maybe energy use isn't bad, or maybe it's actually like a net good and we can do productive things with it, and actually like compute itself is this really valuable commodity. And I think that's shifted the conversation, or at least, maybe it hasn't been realized yet, but will shift the
As a
conversation.
Bitcoiner, isn't it frustrating that it's like AI that it took to like shift this a
Yeah.
little bit?
Yeah.
Sometimes I'm like, hey, it's like that meme with the guy at the party and he's in the back and he's like, they don't even know I've been using energy this whole time. I don't know. Something like that.
No, I totally agree. I also think it's fun to hypothesize. If you do think that we are going to get to a point where we have AGI, and you kind of have autonomous, AI agents that are acting on their own self-interests and providing, valuable services, are they going to bank at Chase? No. So
yeah, of course. Yeah. Are they going to use dollars? Doubtful.
yeah. So I think that's a little bit more, abstract. And,
Speculative. Yeah.
but I think that's a fun conversation.
Oh, that's a great one. I like to think of one of the wonderful conceits that I like to think about is, of course, Bitcoin would have to be the money of AIs. It's the only thing that they could trust, right? They should have very little reason to trust the real world, in my view, because human beings aren't sure whether we're simulated, right? Like we kind of go on about it and we reason about whether it could be true or not. It might be true. It's hard to know for sure. But surely an AI sort of knows it's simulated. So it knows what it's experiencing is, if we really believe in total self-aware AGI, right? We know what it knows what it's experiencing can be made. And so how can it ever be sure that the real universe is real? All right. So even if it breaks out of whatever system it's in our quote unquote real universe, how might it not believe that everything else is still just a test? That there's just another level of compute that it has to break through to realize what the real universe is, and so on. And of course, maybe that is the reality. Who knows? So under this rule, it's like its best behavior, its best conclusion should be, all right, I'll just try to be a good dude and hang out and like just see where this goes. And then at that point, just like, okay, cool. What are you going to do? Buy Bitcoin, do stuff in the world, have to exchange with economic actors other than me. That's probably true too. So yeah, I don't worry about AI, and I think it's probably good for Bitcoin.
Yep. No, I agree. I think it's good, very good for Bitcoin, and if you do think that AGI is a thing, then that has to be bullish for Bitcoin as well.
Yeah.
Internet money.
Awesome. Last question for both of you. What is the thing you believe about Bitcoin that most Bitcoiners disagree with you on?
That's an interesting question. Do you want to start?
I got a good one. Yeah. I think most Bitcoiners, at least in my Twitter feed, are upset in the last few weeks about attempts to model Bitcoin using mathematics or physics or power laws or whatever else. I feel very oppositely. I'm not saying that any particular model is correct or whatever else, but I think even wrong ideas are really useful. And sometimes wrong ideas that are beautiful and maybe have some interesting story behind them and hold up to some scrutiny are even more beautiful. And they're fun to poke at, fun to play with. Moreover, I think I have reasons why I believe Bitcoin should have power law scaling behavior. Just a priori, I think that probably should be true somewhere. And it's interesting that someone claims to have found it. I don't know if Giovanni's results are 100% true or accurate, but I still find them interesting. And I think when I read some of his his writing on this subject and some of the papers that he cites and so on, it furthermore leads me to believe that it would have to be true from my old physics, thermodynamics perspective or whatever, because I kind of feel like Bitcoin is in this like phase transition in some meaningful, precise sense that it, like human beings have liquid and gas, and we're kind of like riding this phase transition chemically and metabolically. There's a reason for that. The phase transitions generate order in some interesting way in self-critical systems, and so like. Of course, maybe Bitcoin is doing that. And if it's near a phase transition, then as a physicist, I expect it to be characterized by certain power laws. And, here are some power laws. So I can trick myself into wanting to believe this, for sure. But in general, even if it's wrong, I kind of don't care. I find stuff like this really interesting and valuable. And I think one can model complex things using approaches from physics. I worry that some people who shout that you can't model things with physics because they're economics think that like physics must be like F equals ma and like vectors at Newton's laws. And I think that's just one kind of physics. Physics is using mathematics to describe patterns in the world. Are we saying we can't use that skill set to model like anything that has a dollar value associated to it. That doesn't seem to make sense to me. And what does it mean to model something, right? Maybe we're not going to say exactly where that thing goes at any given moment in time, but that's not the only kind of modeling that can exist. We can, as long as we can describe and explain and correlate patterns, like there's something to be said and something to be gained from physics. I mean, gosh, if we can allow technical analysis, like surely we can allow a little bit of physics.
No, I think the power law is fascinating.
Yeah.
What's the saying? Like all models are wrong, some are useful.
Correct. Absolutely true.
And so, yeah, I mean, as and I've told this story before, but I was not paying attention in high school English class, and I as a math guy, numbers guy, I found on Twitter, burner account on Twitter, I read the Plan B stock to flow model paper as someone that didn't know anything about Bitcoin. I couldn't tell you what proof of work or the difficulty adjustment was or any of these things. And I'm just look at a thing on a log scale that, and I don't know any of the concepts. I don't know what the halving is. I'm green to Bitcoin. And this is just, log scale up to the right. Just, it was like, whoa, well, what is, linear regression? This is really, really a big deal. And it sent me down a rabbit hole. So like, is the stock to flow model gospel? Of course not. Is the power law? Like, no, these are just kind of framings to view the world in a certain way. So I agree with you there. On my answer to the question, what do I think that most Bitcoiners disagree with? I think it's hard to define Bitcoiner.
Sure.
I guess if we want to call the Bitcoin Twitter kind of the what most Bitcoiners believe, maybe that's true, maybe that's not. But I think all of the new stuff on Bitcoin that has a lot of people up in arms, that I think is all kind of dumb. But I think the emergence of the block space as a commodity and as a market that has demand and volatile demand, of course, is really, really fascinating. And I think that the speculative use cases or the speculative activity in Bitcoin's block space, while probably tough for someone that's running their own Lightning node and managing liquidity, or even someone that's a custodian or someone with a business model like Unchained that's like paying fees or their users are paying fees, maybe that's like a bad thing. But I think if we have this nuclear grade, battle tested, FU money for enemies, then someone making a Bitcoin transaction that's consensus valid, even if someone else has standards on their node that say I don't like this, and it works, and a miner mines it, I think that's really powerful and telling of Bitcoin's
someone paid for
it, of the value proposition. Yeah. And so I think that. And there's a bunch of stuff coming down the pipe, like stable coins on Lightning, and all of this kind of stuff on Bitcoin, and OFAC compliance is going to ramp up, or attempted to ramp up 10 to 100-fold in the next decade. And so, like, if we really do have this censorship-resistant FU money, then I think that a couple crypto people building dumb speculative vehicles on Bitcoin that are inefficient, that utilize this block space, is not the end of the world. There's a self-clearing, self-correcting mechanism called the difficulty adjustment that will, if you want to pay thousands of Bitcoin in transaction fees over the course of a year for XYZ, fine, right? There's going to be hash rate's going to, the build out of hash rate's going to accelerate, the mempool's going to clear. And Bitcoin's going to keep ticking on. So I think the debate has been interesting, and I honestly I love that there's people out there that say I don't like this or I do like this. I'm going to run my own node, or I'm going to not run Core. I'm going to run Bitcoin Knots. I think that's great for Bitcoin, honestly, and I think it really tests the, we talk about decentralization all the time, but it's like it's often this kind of like in theory thing, and in practice, right? It's like, well, if everybody is screaming about this transaction and they hate it, and it still is mined in the next block.
And some people weren't screaming, or at least not enough.
Yeah.
Or some people were not screaming, I guess, yeah.
And so I think that's where it's an interesting sort of
How
debate.
boring. We both have non-consensus opinions we believe that we both counter-agree with. Yeah, because I would definitely endorse what you're saying. Yeah, I think over time, I mean, I guess from if you think about Bitcoin's isolated perspective, like just the blockchain and looking at the data that's in there, like how does it really know that the thing that you're doing is a lightning channel open and close versus some other thing that is quote unquote non-monetary? I think that line is not a real line. That the way the protocols work and so on, like they can always be abused to embed data in something that wasn't supposed to have data. That's just, I feel like, the nature of computing and programming and symbols and giving things names. It's very hard to, I think about Gödel numbering for anybody in the audience that understands that concept. It's very hard to not stick in meaning into something if people are adamant about sticking meaning into it. So yeah, absolutely agree. It's going to happen. I think just what the question is over time, we just have to filter out which cases make sense to go way at the bottom in layer 0 in layer 1, which things are probably okay at layer 2 or whatever comes above that. And we don't have that full ecosystem. And so I think people get worried that, hey, this thing that I don't think belongs in the blockchain is in the blockchain. And okay, that's probably true. I don't think it belongs in the blockchain either, but over time it won't afford to be able to be in the blockchain.
Yeah, it's going to get priced out.
Yeah,
it's all going to
exactly.
get priced out. Like money, and this was, I think, my point as well. Not even from the technical standpoint of like, well, and I looked pretty deeply into it, and I'm not, as much of a technical guy. Like I came like finance economics background, but kind of dove a little deeper into the technical discussions and forums. And from what I understand, you can basically eliminate every functional, technical use of Bitcoin and everything in the core protocol, and strip away opcode, strip away SegWit, strip away the witness discount, strip away all of the stuff that's useful, and you can still end up being able to grind out arbitrary data in a block.
You can decide you want to use the first 4 bits of public keys to hold data and spend enough Bitcoin to make that happen or whatever. It's like,
so in that sense, it's like, what are we optimizing for? And I think that was kind of my main takeaway. And the second one is, well, if you like this stuff or not, I think if you think that this thing is like the biggest, because a lot of the people, including myself, are like, very ardent maximalists that think that this is like the biggest idea in the world, biggest idea of our time. And if you think that, right, like the most important, most price agnostic transactions aren't going to be speculative coins or your JPEG. It's going to be monetary cargo ship transactions like we were describing, right? Like if that's the future we're building, and if you believe that Bitcoin, the asset, is going to be the most valuable thing, then the settlement of that asset is going to be the most expensive thing, and rightfully so, right? If you're settling $100 trillion a day, it should cost something, right? It should cost something, and there's security there. So I think it's been an interesting debate, and I think people are so, and rightfully so, turned off from the crypto complex. It's like, get that away from here. But I think, and maybe this is controversial too, I think, for instance, and I'm been someone that's used my platform to say Ethereum is the biggest shitcoin chain. It's basically all they do is build Ponzi's. But it's interesting that you have tens of billions of dollars of investment into these casinos, and whether anything lasting or not comes from it is something that maybe you can think so or not. But I think that there's been some, like from like just on a cryptography standpoint, there's been some interesting scaling solutions and engineering that has come from it. For instance, like, optimistic rollups on Ethereum were built because you couldn't throw everything on the base layer. And that was like a novel scaling tech to Ethereum. And so is Ethereum a shitcoin? Absolutely. But now you're having people that come to Bitcoin that's saying, hey, maybe here's a potential solution. Here's this thing, BitVM. Maybe we can do Turing complete. We can have a virtual machine on Bitcoin that you don't need to trust anybody to peg in or out. This is like something that we didn't think could happen, and it's still being built out, right? It's pretty kind of proof of concept.
Or a kind of oracle, if not a virtual machine.
Perhaps.
Yeah. Okay, fair enough.
Correct framing there. But the first reference in that BitVM white paper, is optimistic rollups on Ethereum. So maybe it's all. I think it is. The whole entire crypto casino complex is garbage and it's trending lower against Bitcoin forever. That's what I believe.
Sure.
But is there a second order effect? Is there maybe one or two positive externalities from all of that malinvestment? I think so. And so, the fact that there's a bunch of Bitcoin developers that were a couple years ago on XYZ chain, even if they're not building like a Lightning solution, like, is that positive or negative? And I think it's maybe it's controversial. I think it's positive that there's more Bitcoin developers. I think it's positive that there's more people looking at this. I think it's positive that there's more people running nodes, and that there's more people transacting and holding Bitcoin.
It's kind of, I think we unfortunately agree again, because I feel like I 100% believe that that's true. I gave a talk in 2021 with Ryan Gentry, and we tried to make that assertion of like there's this sort of Bitcoin camp and there's this Ethereum camp, and if we were to characterize the most extreme members of each of these two camps, it's like the Bitcoiners like only care about money and they think everything else is dumb, and the Ethereums don't seem to understand how important money is and want to solve every possible problem, including building a world computer, whatever that means, right? Like I don't 100% know what that is, but that's okay because they don't either. And then basically our argument in a nutshell was the world computer thing is connects with more people because like no one thinks about money, even though we use it all the time. People are constantly thinking about how shitty computer software is that they interact with. It's a bad experience, right? To be tracked and followed and all the terrible credentials and lockouts and hacks and spam. Like we understand how bad the internet is. Money is more hidden. Like its badness is more hidden. And so most people don't think about it. Right?
Especially in the West.
Correct. Yeah, I think I am more talking about the West. Absolutely. In our media, we don't see how broken the money is often. And so, we'll complain about tech giants having too much power, but we won't talk about how bad the money is, right? So it's a little bit like that. That's like one reality that we kind of have to deal with. I don't know. So I think I agree overall with that sentiment.
Love it.
Can I do one last one for
Sure.
Dhruv that just came in? So how likely is the emergence of a decentralized mesh net internet built on Bitcoin in the coming decades?
In the coming decade or decades?
Decades.
Decades, 100%. The coming decade, I don't know. That might be hard. This is, again, kind of that idea of putting data inside of payments instead of payments inside of data that we're moving in today's internet model. I think it makes a lot of sense. And I think where should we expect it to succeed first should be places that need it the most, that value it the most. I think there's two ways to think about that. There's like places that don't have good connectivity today. Like I think probably the first touch points of any kind of Bitcoin-driven mesh network marketplace bandwidth concept are going to be to get to the actual internet. Like so places where you can't get to the internet, we'll make it easier for you to get to the internet, but your sort of last mile will be provided by the Bitcoin-powered mesh networking internet somehow. And so you'll pay us extra for that. So it'll be like a tax you pay to get access to like the actual service. Or alternatively, the overall internet doesn't like this content. And so that's okay. There's this tax you pay to get into this like other part of the internet, much like the dark web in some ways. And there's objectionable or controversial things there, or illegal things, or whatever. Like some things that are wholesome, but most things that are not. And I think that's a use case, right? That's things you can't buy with money, things you can't buy with. That's already been kind of true with Bitcoin and other privacy coins like Monero and other stuff, and on the dark web. But if we start moving data around and we start building more complex applications, it's not just like hidden URLs and Tor. It's like Tor plus money, right? Now we can have more robust services, and I think things like piracy become more profitable, and that's super interesting because if piracy becomes more profitable, then intellectual property becomes more frequently attacked. And I'm a big believer that the frequency of attack is probably the most important determinant to security on some level. Things that are attacked a lot become either completely secure or they break, and it's one or the other. So I think there's a lot of interesting consequences to this eventual taking over of communications through markets that are powered by Bitcoin, but it will take a little while to get started, and we should expect to see it at these fringes. I don't know how long it takes, for example, for AT&T to be completely replaced with tiny little local and mid-sized and the occasional global just bandwidth and provider service, right? Like I don't know what that takes. And that looks like every city has tons of mesh endpoints and little strips of fiber and, private or corporate buildings that are deciding to also sell, excess internal, bandwidth. And that's a pretty complicated market to build. It's initially only nerds will want to provide this service, but over time, as it becomes easier and successful and that software starts getting baked into Wi-Fi endpoints that you buy and stuff like this, and everyone has a Bitcoin account anyway, so you just swipe your whatever Bitcoin equivalent of a credit card is in this 20 years from now, and all this might feel very natural. And so I definitely think it's possible over the decades, like 100%. It's just hard for me to articulate when in time all of this starts to happen, because a big part of it, as we say, it depends on if you're going to put data inside of payments, the payments have to really work. So the Lightning Network has to scale to a massively larger degree before things like this are reasonable. We're not there yet. So I think we're still working on the layer before mesh networking or anything like that. That doesn't mean I don't think people working on mesh networking are providing a valuable service. And I think in some sense this touches back on what you were saying previously about the value of altcoins. Like, even if what they're doing is unsustainable because it's not going to work yet, it's too early, or in the case of altcoins, it's on a basis other than Bitcoin, which won't really survive long term, they're probably still learning things, right? They're learning things that are valuable. And I would say in the case of folks who are doing it in the Bitcoin side, who are working on layer 3 or layer 4 type projects, but they're in Bitcoin land, at least they're working in something like a sustainable foundation, because Bitcoin is not going to go away, in my view. Yep. And so maybe they're just early, but hey, even that's kind of okay with me, because by being early, they're creating they're at the horizon, right? They're like the trailblazers, and some might die out there in the forest exploring wild territory, but it's because of them that we kind of get a sense of what demand might look like in the future. Like, I'm a big believer that some of the requirements of the Lightning Network drove either the design, implementation, or acceptance of SegWit, right? Because solving transaction malleability was really important to being able to build second layer networks like Lightning and other things that require TXIDs to not be malleable. And so that was an important change, and SegWit delivered that. And that was an interesting demand pull, in my view. If we didn't care about transaction malleability, for example, the need to solve that problem would have been less. So the need for solutions like SegWit, which are partly solving that problem, would have been less. And so I think layer 2 creates demand pull for features and capabilities and certain design choices and constraints on layers below it. So I think it's really important for us to solve that problem.
I can tell you spent some time thinking about it.
Maybe, yeah.
Love it.
Thank you so much.
Cool.
All right. Thank you.